crisis. Now, with over 500,000 cases confirmed in countries over the world, with many shutting down to stop the tide of the virus, many countries stand the risk of a recession. There's more in the following report.
Economic activities have taken a hard hit on the global economy due to COVID-19. Unemployment is soaring.
Well, technology when you need it most. We'll be bringing you that story later on. But the big question we've been asking today is, most people are asking for a lockdown, but have we thought of the economic implications? Well, some are actually asking for a partial lockdown. I was having a conversation with Stephen, who was saying a regulated lockdown would be more appropriate. But for some economists as well as some analysts, they believe that if we are locking down, we should look at the economic impact. For instance, the buffer stock. Do we have enough buffer stock to lock down? Well, Professor Godfrey Bokpin is senior lecturer at the University of Ghana Business School. We'll be engaging him shortly to also get his thoughts on that. But before that, we'll also try to get through to Professor Peter Quartey. We understand that Professor Bokpin is on the line. Prof, good to have you this afternoon.
Good afternoon. Good afternoon to our cherished viewers, wherever they find themselves.
Great.
As we try to isolate.
Great.
And then keep the minimum social distance.
Right. Now, I'm sure we've had this conversation before, but it has come up for discussion again. Looking at the economic impact of a lockdown, are we even ready as a country to lock down?
Well, I think that as for being ready, I don't think that we are ready. Perhaps if we get to the point where it has to be done, then it has to be done not because we are ready, but because it just has to be done. The reason I'm saying so is that because making the call is very easy. Let's do a lockdown. But the ramifications, the implications, because from the medical point of view, I can associate with them that a lockdown will be their prescription. But that decision does not rest solely on the medical field, because then you are cutting across into other related sectors, like businesses, purely, like the social sector, the economic sector, the financial sector, and all of that. Then when it gets to that point, then you realize that the consideration will not be totally on the recommendation of the health professionals. Because then it erodes in security, enforcement, and all of that. Then look, lockdown, baseline, you know what that means? You are taking over the means of livelihood of ordinary Ghanaians. Then what it means is that once you are taking over that, lockdown means they can't go to work, they can't do this, then the state must come in and provide that.
Well, Prof, before you continue, I'm sure you've heard that the president has directed the finance minister to perform some economic impact assessment if we are likely to declare a lockdown, whether partial or regulated. What are we looking at here, talking about the assessment? What should we expect the finance minister to really take keen interest in?
The operational budget is more important. What will be the cost to us? And then also, when we go past that level, the next level will be, where are we going to find the money? Then, how do we operationalize it to make sure that if we are talking about distribution, sending out stimulus package and all of that, it actually is done effectively and is done efficiently. Those are critical issues, because the virus tells us the intricate linkages among the various subsectors and all of that. Okay, and the lockdown certainly is going to have a big impact on the economy.
Okay,
it's going to have big impact on the economy. That is a given. From the formal sector, it may not be so difficult, because perhaps government will continue to pay salaries. How about businesses?
Right, the informal sector as well.
Wage bill to what percentage? And then you talk about the huge informal sector. So when you do a lockdown, you want to look at the permutations.
Okay.
It will favor the higher income earners because they have been able to stock for themselves and their dogs, maybe for the next 2, 3, 4 weeks. But then look at the social demographics. The people at the lower end, they are in the majority. This lockdown may not mean much to them because in one particular room, you may find that there are more than 25 people in that household. They use a common toilet. They use and all of that. So these are the realities on the ground. So
okay, Prof.
if you do anything, we expose them more. So
okay.
I'm not against lockdown, but we have to think through carefully. And the operational issues that have to be done, we have to think through carefully so we don't jump into it. And when it backfires, then the risk becomes higher.
Okay,
and
Prof.
then also when you talk about lockdown,
all right, but Prof, I'm sure this conversation would continue again subsequently. But we are grateful for your time on some of the pointers that you've raised. If there should be a lockdown in consideration, and which kind of lockdown we should think about, Professor Godfrey Bokpin is a senior lecturer at the University of Ghana Business School. Let's go back to that earlier story, still talking about COVID-19, which has pushed the world's economy as well as markets into recession. Crisis, actually, with over 500,000 cases confirmed in countries over the world. With many shutting down to stop the tide of the virus, many countries stand the risk of recession, and there's more in the following reports to that.
Economic activities have taken a hard hit on the global economy due to COVID-19. Unemployment is soaring in the United States, and a $2 trillion stimulus package is expected to ease pressure on businesses. The fear of recession and the economic downturn has forced governments to open their war chests. Fiscal and monetary stimulus measures have been put in place to counteract any disruptions. Australia has announced an $11.4 billion stimulus package to help the economy and payments to small businesses to encourage hiring. China's central bank, the People's Bank of China, has implemented several policy measures aimed at providing monetary stimulus with $174 billion. In South Korea, the country announced a $9.8 billion stimulus package for small and medium business subsidies to help companies pay workers, childcare subsidies, and for job retraining for people who have lost their jobs. Hong Kong's embattled government unveiled a budget package with giveaways, including a one-time cash handout of $1,200 per citizen. In Africa, however, governments are yet to announce any such packages. President Kufuor has, however, asked the finance minister to do an impact assessment of a lockdown. Is the global economy about to see the biggest economic burst in history? Some experts say no country is ready enough for the fallout.
And once we talk about the economy, the banking sector is key in that. You quite remember the Bank of Ghana, in the face of this COVID-19, came up to reduce the policy rates to 14.5%. And we've been looking forward to see what commercial banks are also doing. And talking about what they are doing in the face of that, we've had banks like Republic Bank giving customers some 6-month moratorium on their loan repayment. Also, Fidelity has also put some packages in place, and we would want to look at what other banks can do to replicate these actions in the face of the pandemic. Professor Peter Quartey is the director of the Institute of Statistical, Social and Economic Research. Prof, good to have you this afternoon. First of all, we want to find out what more in terms of packages can these banks put in place in the face of this pandemic?
Well, good afternoon to your viewers. The banks are part of the society, and therefore, in times like this, they need to step in and ensure that the social good, they put in strategies to ensure that the economy grows for the social good of our country. So the Bank of Ghana first took the initiative to, as a regulator, to reduce the policy rate. It also reduced capital adequacy requirements, reserve requirements, all of this to free up resources so the banks can lend at lower interest rates and also have more resources to lend to the private sector to stimulate the sector. But beyond this, I think the banks have what they call corporate social responsibility, where they can, we hear that the health sector needs certain key items, PPEs and the rest. So the banks can support in providing sanitizers, masks, gloves, and many other things. Even if they can, in terms of ventilators, because these are big corporate institutions, they should help to procure more ventilators. In addition to also using their platform to support education, that would be very good. We expect the banks to offer lower lending rates. One that is provided banks, the private sector can borrow and invest and produce, so we could stimulate growth. Then also we can speak about deferred payments to customers. But not all customers in good standing. But let's bear in mind that the money they lend out are deposits of you and I. So at one point we'll also go for our money. And as much as we want the banks to do more, we also bear in mind that the banks are holding deposits that they have to pay interest. So that could be done. But they can defer loan repayments.
Okay, Prof.
To customers that are in good standing, so that they certainly have to get the money's back. And also defer the interest payments and the rest. That they can support credit to the productive sectors of the economy. Then lastly, in terms of employees, the banks should, as much as possible, not shed employment, not reduce employment if they can, because otherwise it's rather going to worsen the situation. Already due to the banking sector cleanup, some people lost their jobs.
Right.
And if through this COVID-19 they are going ahead to lay off workers, it's going to be a problem. Perhaps they could sit down with workers and negotiate some cuts in salaries or whatever. But shedding labor is not the best way to go in these times.
All right, Prof. We are so grateful for your time. Professor Peter Quartey, Director of the Institute of Statistical, Social and Economic Research there. Already some banks have taken the initiative. I know Republic Bank is one, Fidelity is one. I'm sure some other banks are also putting plans in place to replicate this in the face of the pandemic. That's it for the business segment. We return shortly with Thierry Nyan with the latest from the world of sports. Midday Live.